Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that it overall improves our financial success. Hello everyone and welcome to another Money Mindset episode. Today I wanted to, because Christmas is coming up, I wanted to talk about cash flow for businesses, including people that are actually going on holiday or will not get paid. So people that obviously operate or own a business, which sometimes Christmas holidays, it can be quite lengthy, a lot of time off, people gone away, so business isn't as busy. Call it a cafe as a shop front or something like that, or it could be a factory where a lot of your staff are away and they've planned holidays in accordance to the Christmas holidays. So cash flow does become a bit of an issue for most business owners. That also can be for people that are currently just employed as well. So for instance, if you're on casual, if you pay full time but you've used up all your leave, all that sort of stuff, right? You know where I'm going with it. So cash flow, preventative cash flow issues or being mindful of what they are is going to help you be able to sort of budget and manage your cash flow accordingly. So I'll sort of break it down as what I normally do into manageable thought process, but what we should be looking out for the potential cash flow squeeze through the holidays. The biggest challenge is often the timing mismatch between sort of large outgoing expenses and your incoming revenue when it comes to business. So obviously, you guys know your businesses quite well and better for that, and you sort of accommodate for it. But sometimes these little tricks and bits and pots that I'll point out with will be able to sort of help accordingly, which I hope they do. First one, what I just want to be outgoing and make it a tentative is increased outgoings, which they call the cash drain. Yeah, it's inventory stock build up. So you sort of got to pay your suppliers for the holiday stock weeks and months before the revenue or from the sales come in. So if you've got to pay your suppliers for more stock just to fill up for the holiday, then what you're actually doing is spending more before you even get that money back from the sales that come in from that stock. Yeah, so over ordering ties up large amounts of their capital unnecessarily for that time, but when the sales do come in, well, you obviously get paid for it. So it's just having that inventory and stock build up, which costs a little bit more in anticipation of a Christmas rush, right? Seasonal staff and wages is the other one that I wanted to just briefly touch on, which is obviously higher labour costs. So anyone working through the holiday period, obviously rates go up. Then you've got to pass that on down to your clients, the people that walk in through the door, that sort of stuff. It becomes a bit of a panic. People may complain why the price is up or why is there a surcharge, all that sort of stuff. We've all seen it, right? And paying out the annual leave, loading holiday bonuses, everything prior to the holiday break. So this is another squeeze of cash for businesses. So that's the other thing is the marketing and promotions. So increased spending on the festive season advertising and promotions to sort of drive sales. I've seen that a lot, where a lot of people anticipation when they've got a lot of competition, whether it be a business that's a cafe that highly depends on traffic or familiarity with their clients, they sort of need to promote and send out emails and get some money spent on some marketing to go and advise them, hey, use our shop front or whatever it may be for a Christmas lunch, that sort of stuff, restaurants, pubs, that sort of thing, and anticipating that the suppliers do shut down through Christmas. So when it comes to a business that requires their suppliers to be on hand, you sort of really got to anticipate and know when the suppliers are not there to supply the goods, right? So some suppliers may require payment before they close for the holidays, sort of accelerating the payables. So they'll turn up and they'll say, well, okay, look, because we're not going to be in, we need you to pay up front. Does that happen a lot? I don't think it will. With my clients in business, it hasn't happened quite often. They've got a really good relationship, especially through COVID. They found that most suppliers are working along with their clients as well, so they're all on top of it. The ones that are not reasonable, as in the suppliers that are not reasonable, sometimes it'd be a good idea to see if you do have alternative sort of suppliers in this period, if you find that your cash flow for business is sort of restrictive, right? And if that's the case, also speak to me. I can help out direct that. But the other one, or the last one I sort of wanted to sort of, when it comes to increased outgoings, sort of with the cash drain, is the postponable expenses. So costs like new equipment or office upgrades that are not critical for the season, holiday season, but they drain the cash flow sort of now, sort of thing. So but I think with most people who operate their own business, they sort of know what, as in, especially when it comes to office upgrades or new equipment, making sure they've got the cash flow to do so. I think the operations more so with this is the more important thing. So business owners that are sort of mindful that they will need, and they quite often, good ones, keep a surplus of funds, so they make sure that they've got a bit of a float there that will assist when things are quiet, or they do need to pay their wages and hiring extra staff, etc. Right? Now the revenue lag is what I call it, is the late customer payment. So accounts receivable, because businesses, or many businesses, shut down or have reduced staff over the Christmas New Year break. Invoices sent in December may not be processed and paid until well into January. So this can also cause a bit of a lag, reduce profit margins. So deep discounts and aggressive holiday sales can reduce the profit per item. So those of you who are sort of promoting, if you buy two or more and that sort of thing, and you're not getting the full sale, that's something that will prevent a bit of revenue or extra revenue for coming in for the stock that you purchased. The quiet period impact is if your business is not retail or hospitality, what I've been using the example for, you probably will experience a significant slowdown in December and January, right? Because they're sort of short months. We all know Christmas holiday is the 25th of December. So inadvertently, before that, then you've got a few Boxing Day as in holiday, then you've obviously got a few holidays, New Year's Day, and it sort of breaks up depending on if it falls on a weekday or a weekend. But the fixed expenses, such as, and this is what I always make sure my clients are aware of, their fixed expenses, as the statutory are the rent, salaries, utilities, they keep going. So these sort of expenses never recognise a holiday per se, so they're out of your control. They're just the norm. Make sure you've got additional funds for that without saying, right? And obviously tax obligations is another one. So upcoming tax payments, make sure, especially if it's a quarterly BAS or GST, income tax instalments, make sure they're paid. Tax department don't really care about whether it's December or March or whatever, as those of you know. So they sort of really need to anticipate as a business owner to make sure you've got that in the kit as well. Now the central theme is planning and speed, right? With this, and this is what the episode's really there for. So to get the cash in fast and delay or control what goes out, that's what we've got to do. So increase and accelerate cash inflow. So invoice early and promptly. Make sure that your team are doing that, or you're doing that yourself. So if you're a one-man band or have a massive team or whatever, just make sure that you invoice early and promptly. Send out all the outstanding invoices immediately, sort of be onto that, especially to clients who may close their accounts department early for the holiday. So be on top of that. Make sure you're on top of that. Even if you're out 5% of this, it does, depending on your turnover, makes a massive difference, right? 5% can sometimes make or break. It's incentive as in early payment. Sometimes what, as business owners, and I highly recommend in some instances, depending on cash flow, offer small discounts for customers who pay their invoices within, call it 7 to 14 days, particularly before the holiday cutoff. So what you may find is the incentive to pay on a smaller discount is going to sort of, you're going to keep the client, as in the supplier relationship, even better. Because I mean, I tell you, if you're reducing an invoice down from 10,000 to, call it 9,000 or whatever that discount you can afford will be, especially if you're getting it in early. It sort of helps both of you. It helps them save that money, and it also helps your cash flow come in to sort of keep it buoyant over the holiday period. Rather than giving discounts, what a lot of other clients of mine like to do, what I found does work, is promote gift cards or vouchers. So they sort of give them that selling gift card sort of promotion provides immediate cash flow for now. So look, does it happen a lot? Yes, sometimes. Is it something that requires more marketing? Yes. If you're not sort of inclined to sort of want to give out and promote gift cards and vouchers and stuff like that, and this is something that's it's something to consider maybe down the track, but this Christmas, obviously, I would always advise maybe just, talking with your suppliers and giving incentives for the early payment, or making sure you've got all these tricks in your sleeve, as in, well, not tricks, but just strategies to get the cash flow in faster, right? So, and I would also make sure that you do chase the overdue debtors aggressively, like really make sure that you're on it. That's probably a mandatory thing as in number one. Just make sure you implement a firm sort of follow-up strategy for all outstanding invoices before the break. Personal phone calls, whatever it may be, to make sure that these guys are sort of paying up front. They've got to understand, and look, it doesn't mean that you've got to sort of go in there and, but empathize with their situation. They're in the same situation as you as a business probably. They've been told to sort of try and restrict cash flow, all that sort of stuff, swings and roundabouts, but make sure that you're on common ground, as in explaining to your suppliers and your clients to make sure that everyone understands that cash flow is tight, and to sort of try and implement these sort of strategies to get that cash flow coming in. Control and delay your cash flow outflow. So forecast cash flow. Like I was saying before, a lot of my clients are good at doing this, obviously, because we've been around the block a few times with this, and forecasting your cash flow is probably the most important. And this goes for anything. Could be mortgages, saving for a holiday, yeah. Look, it's simple, guys. Mathematics works in this instance, and we've just got to follow the same formula with small business and cash flow. So create a detailed cash flow forecast for the next 90 days. So especially a single most important step to identify potential shortfalls before they happen is to actually create this cash flow diagram. A lot of you business owners especially, and look, even I've been guilty of just doing the numbers in your head and sort of overcompensating. Yes, if that's how you run your business, that's fine, but it's always better to make sure that you've got an itemised list of all the statutory expenses, adding in some sort of discrepancies or contingencies for that matter. So for instance, and even with a home loan, you guys can do this. Anyone with an at-home cash flow analysis, how much does shopping cost every time you go to the supermarket? Well, how much does petrol cost? Itemise insurance, all that sort of stuff. I've got a template that I can share that makes it easier, and you guys, you'd be surprised that when you actually write it down and itemise everything quite accurately, how much those expenses mount up to. We always sometimes tend to over or undercompensate, when we're trying to have a look at cash flow, just to make sure that what we're thinking or working out is on a positive side. But the reality sometimes can be that it's marginal less than what we compensated or thought of in our head. So make sure to write these items down to be specific with. Don't go romance with any of these figures. Make sure that they're actual reality figures, as in what it's costing you per week, per month, however you want to do it, per quarter. Make sure you budget that accordingly and be honest. The other thing is add a contingency. So for instance, those of you who are working out just for mortgages or for a business, if your expenses are, call it $2,000 a week, schooling fees, everything, really just add it up, itemize it. $2,000 a week, I would put a contingency roughly of about 3 to 5%, and you'd add that to, let's say, even if it's 10,000, your costs are 10,000 running a business per month, then 5% contingency would obviously be added in for that. Now, the reason why I added contingency in is to make sure that it accommodates for price rises. Could be random expenses that you didn't anticipate, could be a repair, could be a gift, whatever, things that don't often happen, but they do happen in life. Just add that in, and that sort of overcompensates to make sure that your cash flow is more buoyant than what you sort of, the reality of it is. So The other thing is to help sort of optimize in inventory in a business is just sort of use your historical data. So for instance, last year's sales, to forecast your demand accurately for the time that we're going through with the holidays. Don't overstock is also another one that sort of, don't overcompensate. So make sure you're accurate once again with inventory, not only for your cash as in the numbers, inventory as in itemizing, doing stock takes, sort of, and if you can, clear the old stock. Sort of just run promotions to clear out non-selling or slow-moving items to sort of convert into cash, yeah? So you can do all this all in one go when you're operating the business. Negotiate supplier terms, so politely ask for key suppliers of your business to sort of slightly extend the payment terms. So if it could be 45 or 60 days instead of 30, that sort of thing. Just for the over period to bridge the gap. And like I said earlier, you can also give incentives there. So you could also postpone non-essential spending, so defer any large sort of non-critical expenses. New equipment, offers sort of the office refurbishments or whatever it may be until the new year. So when cash flow sort of stabilise, so control that. But that's a bit of a no-brainer, right? And also manage staff leave and payroll. So plan your staffing needs and leaves accruals sort of early. If you sort of are going to close down over a certain period, communicate payment schedules clearly, make sure there's no sort of miscommunication. Transparency is key, especially with staff. Consider asking the staff if they are happy to sort of be paid on normal pay runs rather than one large payment up front, that sort of thing. Once again, communication. Allow empathy into that transparency of communication between your staff. I think a great boss or great business owner is really transparent in communication with their employees. That's most successful businesses out there, what I found, are those that work in well with their employees. Employees, do an awesome job. The boss does an awesome job of looking after them, and that's the perfect synchronicity between employers and employees type of thing. So make sure you do communicate clearly. Obviously, incentives, all that sort of stuff, right? The normal stuff that comes with running a business and having employees. So once again, the last thing I suppose is having a safety net. Like I said, the contingencies that I always place in expenses is mandatory when I always do my costings and stuff like that. Any business owner should. You shouldn't sort of put your head in the sand with that sort of stuff, as in, but a safety net, so secure funding in advance. So if your forecasts predict the shortfall, let's say, for whatever reason in business, arrange an external funding option rather than waiting for an emergency. Sort of lines of credit, short-term gaps, that sort of thing that could get in the way. So a flexible safety net for short-term gaps is that for a line of credit. If you're thinking, look, debtor finance, invoice finance, selling your outstanding customer invoice to a third party for an upfront sort of percentage of the cash is a solution that would work for you. Obviously, give me a call. But that's becoming more accurate with it. And then also set aside cash for tax. Some people prefer to have a separate bank account for that. Realistically, me being a stickler when it comes to cash flow and stuff like that, I'd like to itemize everything. Sometimes success isn't about how many bank accounts that you can segregate for whatever expenditures there are, but sometimes you can allocate funds and do what you've got to do to help your money or the funds that you've got coming in work for you rather than against you. And there's multiple ways, bank products out there that when you do know that they exist, it enables you to sort of plan ahead. So sometimes it's not always a good idea just to sort of do a simpleton approach to this. If your business is growing or it's making money or it needs a little bit more attention with the cash flow stuff, it doesn't necessarily mean getting a loan is going to help. You really want to talk to someone that you entrust with the numbers. It could be your accountant, financial advisor, that sort of stuff, in relation to what's going to be more beneficial. Speak to other people that are in a business, mentors, whatever. I mean, there's a whole sort of array of experts that can help you with this, but making sure that the cash flow is correct, I think, comes down to the business owners and the operators and the financial controllers of that business, simply because it's partially a responsibility of why you started the business. It's the financial benefits that you obtain. Not only is it the passion for the business, but it's also to make sure that that business is going to survive long term rather than sort of cop a lot of hits along the way. There are ways to prevent this. So those of us that own businesses, own a mortgage or things like that, yes, they are burdens and they are there for a reason. And that reason was to improve our lives, obviously. We wanted to get involved more with, growing financially, creating a lot more wealth for ourselves or what have you, have our money work for us, even though we've generated income and we've saved a lot of money. What do we do? All that sort of stuff. But we also got to look after today, which is the cash flow and the other stuff that's associated with the business. So I really do hope this episode helped, guys. With Christmas coming along, I think it's a time to sort of also not just worry about cash flow, but rejoice in the fact that it is a time to sort of appreciate what you've done in the year and make sure that you continue prospering for the next year. And those of you that are sort of having trouble finding, that sometimes finance can be tight with these sort of instances, make sure that you start planning. Christmas holidays is great to have a break, but it's also awesome to not have as many distractions and sort of go over a lot of the pain points or improvements and potential improvements and discussions, or write down items that you'd really want to address and talk to the appropriate people in the new year with to sort of help you escalate your wealth, that sort of thing. All right, guys, thanks for listening and see you on the next episode. Thank you.